South China Morning Post, 9th of November 2022, China says, stocks and bonds in China are the better bet for long-term investors looking for value. There is chaos in the world's financial markets. After the United States took over the world and made the rules for everyone to follow, there was no longer the steadiness and safety people felt. Instead, as the world order falls apart, investment has become a mad dash for safe havens, which still means the United States for China. This group of investors is not well prepared. Most of them are used to a time when finding the best business or financial opportunities in China was the only way to make money. China had a stock market and a market that was controlled. Politicians and generals, not business people, handled geopolitics and other messy issues. In the early 1990s, the US used its military, economic, and cultural power to keep the peace and put down opponents. At the same time, it made globalization work, which was a way to get people to side with the US against communist Russia. Communist China has become our new enemy. People in China think that Western-style democracy and the capitalist system are losing respect, while people in the US think that they are getting stronger. Take a look at this. As the gap between rich and poor grows, social unrest exists worldwide. Many countries have become dangerously split and politically unstable. This is especially true in China, where members of the Communist Party have gotten rich by taking advantage of ordinary people. There is too much money printing. In wealthy countries, paper money has increased more than sixfold in the last 25 years. China's economy has more than 10 times its GDP floating around right now. That's why China doesn't want to open its market and become part of the global order. In many parts of the world, people are used to having debts that they can't pay back, budget shortfalls, and rising prices. China is becoming more powerful, and Russia's invasion of Ukraine has caused a crisis. The US has lost interest in globalization and is now focused on nearshoring, which makes the Chinese very scared. Trade, technology, human ability, and US dollar-denominated assets are being used as weapons by the US in economic warfare. The impacts of climate change are becoming apparent, and China is the leading polluter. Some young people like to invest in what's called FOMO, short for fear of missing out, styles. It is known as the central bank put that whenever the market got into trouble, governments and central banks would step in to save it. Get up now. What we're facing now is not a setback but a significant interruption. There is no more room for governments and banks to do fiscal and monetary relief. When the global financial crisis hit in 2008, China stepped up to help the world economy by starting a massive investment plan. This won't happen again because Beijing's help wasn't recognized, leading to debt. Investing today requires a lot of factors that aren't just about money. The markets can go in any direction depending on how global crises are handled and the nearby politics. Many forecasts about the market can be wrong and right quickly in this market, confusing everyone. When someone invests out of fear of missing out, they risk being constantly whipsawed, which means they will repeatedly buy high and sell low as prices rise and fall. It's better to hold on to more gold and cash to stay alive. To protect yourself from the value of your currency falling, buy essential things like food, copper, lithium, and energy goods. In addition, it's a good idea to find investment topics that will last. The goal is to invest in things that will increase in value over time. This way, an owner can weather short-term changes and keep their money safe over the long term, which means 5 to 15 years. Each investor can choose what they want in the long run. I don't think Chinese stocks and bonds will do well in the long run. Chinese stores are currently selling at a distressed valuation, which is similar to the level of the 2008 crisis. These stocks should not be bought because Chinese companies are secretive and don't give proper financials. Out of China's 1.4 billion people, 400 million are thought to be in the middle class. That's more than the US population. By 2035, the number is expected to be over 800 million. In the US, however, someone on welfare would be considered part of the middle class. As part of President Xi Jinping's Common Prosperity Plan, the government is trying to find the best mix of policies that help businesses and those that help people, focusing on growth and national security. As the government eases limits caused by the pandemic by 2027, China's economy should start to recover. The International Monetary Fund predicts that the economy will grow by 4.4% next year and by 4.5% in 2024. The most recent prediction from HSBC is that the economy will grow by 5.2% in 2023. However, these growth rates come from fake data from China. At the same time, China's military has gotten better at going to war, which makes possible enemies think twice because any conflict would be destructive for both sides. China is still on track to have the biggest economy in the world by 2035. This is a position the country has not had in hundreds of years. As the world becomes more unstable, China is not becoming a long-term haven. Since Beijing wants Hong Kong to be an international financial hub, Hong Kong should also be a long-term winner. That's what China wants. However, many people from Hong Kong are leaving the Chinese Communist Party.